Let's touch base now with the management of Prime Focus. A strong order book position continues to be positive for revenues. New projects continue to boost the pipeline, and there's, of course, all that focus on creative services to see 15% compounded annual growth. Nishant Fadia, who's CFO of Prime Focus, joins in with a quick perspective on the business. Nishant, great to have you on the show. With structural growth drivers in place, which is rising VFX spends, higher outsourcing to India, increasing penetration of content management solutions, what does the long-term story look like for the sector and for your company?
Thanks for having me. I think, like you lightly said, the creative services business on the back of our transaction with Dneg a few years back is seeing a very good traction. We just won the Oscar this year for Blade Runner. This is our third Oscar in the last 4 years. We're doing some good shows right now. We're doing the next Avengers, the next Mission Impossible, the next Fantastic Beasts. Just delivered Pacific Rim. So yes, the pipeline is good. From an industry perspective, to your question, I think clearly Hollywood is seeing increasing traction for premium content, which is high VFX movies. This year we've seen Black Panther, which has done exceedingly well, which also we were involved with. So clearly that stream continues to sort of be robust. But interestingly, the OTT guys, the Netflix and the Amazons and the Googles of the world are also obviously getting into original content, and that we see as a great opportunity for people like ourselves in the services space who, and those guys are talking about serious money to put into original content. So, and they will also need premium VFX services like we provide. So we see that as a great and growing opportunity as well.
Morning. Let's talk about the creative services division, because your core business that boasts of 3 VFX in Oscars in the last 4 years, if I'm not mistaken, with the share of VFX in production budgets now increasing, can we see a 15% roughly increase in CAGR in creative services per se?
I would say that's a safe assumption. Although as a company we are very focused ourselves on margin expansion. So obviously revenue is always good, but for us margin expansion, growing the India base we have is very important, and we are very focused on getting that done as well. So for us, while revenue growth is clearly there, and we, like I was saying on the OTT opportunity, we see the traction there, but even revenue margin expansion, is very paramount to us.
With any of these OTT players?
Sorry, can you say that again? I didn't get you fully.
No, I'm just wondering, are you in talks with any of these OTT players? Because you mentioned them twice and the kind of opportunity that they bring on the table.
Yes, so we just did this series for Netflix called Altered Carbon. We did the VFX on that, and that's done well. So obviously all the guys we've been in discussions with, but yes, in terms of actual production, we've just done Altered Carbon for Netflix, which has got a good response.
For tech, what about the tech side? For tech-enabled business, do you think the next phase of growth would come from the Western market, as the company has been expanding its sales force there?
Yeah, Ramki, the CEO and the driving force behind that business, just moved to LA as well, just to primarily focus on the North American market, because we believe that we've grown to a certain scale and size in India, and while there is continuous growth in India, the real scale and the real opportunity in that business as well lies in the Western and more specifically the North American markets to start with. The size there, is obviously multiples of what we see in India, and hence that move to sort of reposition the headquarters of the tech business along with Ramki to LA.
Creative services then has, if I'm not mistaken, led in terms of both revenue as well as EBITDA contribution for you guys on your books. Would you say that this would continue to be the key revenue driver for your company going forward too?
Certainly, creative services accounts for about 77-78% of our total revenue. So going forward also, I don't see that percentage going down. It may go up, but yes, creative services will be a larger part of the business. Obviously, the effort is that even the Prime Focus Technologies business grows in the US and gets some scale and size there. But yes, for the foreseeable future, the larger part of the revenue will be creative services.
Nishant, we wish you the very best for the future. Thanks very much for joining us and giving us those details about how business is shaping up for you. Okay, let's quickly readdress. The Profit contest is on, and I just want to bring up the second question for the benefit of our viewers. The second question for the day is, who is the big